Well, let's start with the currency market action, and we saw a flight to safety to the US dollar, which is hurting currencies around the world. The rupee weakening today, hitting a new all-time low again as it plunged in trade. One US dollar now costs 81 rupees and 62 paise. In the bond market, India's 10-year benchmark bond yield also spiked as the US yield hit multi-year highs. Lata joins us now to wrap up the money market action for us. Lata, 81.62, that's the dollar rupee for you. Where are we headed?
Well, this is all global chaos. So over the weekend, the pound plunged so much that you saw fresh highs in the dollar, 114, and US yields, as you said, spiking to almost 3.79, and the two-year US Treasury spiking to 4.2 or even higher. So, you know, the typical reaction is when I get a risk-free return of 4.2 in a two-year Treasury, why should I be staying in EM currencies where, you know, I will even lose the principal on currency depreciation? So we saw in the NDF market overnight a plunge, and all Asian currencies were nearly 1% lower in morning trade. This was just an arithmetic trade in the morning done by hedge funds who operate, you know, in the NDF market and across countries. It isn't as if actual clients like, you know, oil companies came and bought dollars thinking that it will be 82 tomorrow, or, you know, exporters refused to sell. It's not, or that equity traders sold. It was not a real economy play as much as traders correcting positions, covering any short dollar positions. But now all eyes will be on the Reserve Bank. You know, what is the whole number that it is trying to protect? The Reserve Bank in turn will watch whether there are actual outflows. But now that the whole number 80 is gone and the whole number 81 is gone, there is a bit of a catching of the breath between 81.50 and 82. People will watch, but if global cataclysmic moves happen in the financial market, even this will pass. Everyone is waiting to see where there is a bit of a catching of the breath and a feeling that enough is enough. In the bond markets, yes, yields have spiked, and that's obviously led by US yields, in spite of the fact that we have an advantage with crude really crashing. You know, people are only looking at the way US yields are surging. The bond markets are now actually already factored in a 50 bips hike. Our own Citizens MPC has voted 4:1 in favor of a 50 basis hike. So it is already in the price. If you looked at the OIS, the overnight index swaps market, which is really the most active, reactive market, that has priced in something like 6.9% 1 year down the line, which means they believe that if the Fed goes to 4.5 and 4.75, then India's peak rate also has to be 6.75 or even higher. So a lot is already priced in, but just as a matter of detail, today only the 10-year bond by end of trade, actually the yields fell a little, because looks like, you know, foreign banks are seriously short and they actually had to cover. But otherwise, yields are on the upswing.
All right, Lata, many thanks for joining us to take us through what's happening in the money market. And as Lata was mentioning, the rupee is not alone. The British pound also weakening to a record low versus the dollar overnight after the new government announced tax cuts despite fears of a recession. Meanwhile, the euro has also touched a two-decade low. The Australian dollar has hit multi-year lows, and the Chinese yuan fell to the weakest level in 28 months. Other Asian currencies like Japan's yen and South Korea's won also weakening today. And from the currency markets to the stock markets, it was a sea of red across the world, and our markets were no different today. The Sensex and the Nifty falling to the lowest level that we've seen in 2 months, and the fall was led by financial stocks. But the sell-off that we saw today was broad-based, even though we did see a little bit of recovery coming in today. Mid-caps have seen sharper cuts in the blue chips. About 11 lakh crore rupees worth of investor wealth was wiped out in the last 2 trading sessions. That's the market action for you. And in the commodity markets, oil prices in the red for the second straight day, with Brent trading below $86 a barrel as fears of demand destruction and a surging dollar have impacted buyer sentiment. Crude remains under pressure even as OPEC Plus producers say they may curb output to support prices, but 85, that's where Brent finds itself almost at an 8-month low. In fact, falling crude oil prices may bring some relief to Indian oil companies. The Revenue Secretary Tarun Bajaj said that the government will review the windfall gains tax at the end of the month. That's as part of the fortnightly review, which is underway. He also made it clear that any decision on whether the tax will be done away with altogether will depend on incoming crude data. Take a look.
तो फर्स्ट को तो है ही 30th को या फर्स्ट को आने तो दो डेटा अगर कम होगा तो कर देंगे कर तो रहे हैं आर क्रेडिबिलिटी इज इन द फैक्ट दैट वी हैव रिड्यूस्ड द टैक्सेस व्हेनेवर द प्राइसेस हैव गॉन डाउन
So that's the Revenue Secretary. Remember, the fortnightly review of the windfall gains tax will take place on the 30th, but whether the government is likely to do away with the tax altogether or it will wait to see the trend line as far as crude prices are concerned, that is the big question. The GST Intelligence Unit has issued a show cause notice to Bengaluru-based online gaming startup Gamescraft Technology. The company has been accused of not paying GST the tune of 21,000 crore rupees. Now, this is the biggest show cause notice in the history of indirect taxation. However, the company says authorities are claiming dues on the basis of 28% applicable tax to the games of chance and lottery instead of the 18% applicable to online platforms of games of skill. Remember, the group of ministers who were supposed to submit their recommendations on how the tax should be levied on gaming has not yet presented its report. Now, the GST kitty remains strong. Sources say GST collections for August are likely to be in the range of 1.47 lakh crores to 1.5 lakh crores. The growth in collections is likely to come on the back of higher festival buying and healthy sales in Tier 2 cities. And staying with the festive sentiment, India Inc. is pinning its hopes on demand pickup as the festive season kicks in. Axis Bank's Amitabh Chaudhary says festivities can change the mood across rural and semi-urban markets. Girish Bagh of Tata Motors also is upbeat, expects sales growth to hit double digits this year.
A lot of people are looking forward to this festive season coming up, which has already started, and the evidence which we are seeing, especially for the right products, right brands, is huge. I think Indian consumer is looking for that right value proposition, and if it is offered to them, they grab it. So I do expect that in the festive season things will pick up. Obviously, the rural and the semi-urban demand is a bit muted. Hopefully, this will help revive that demand and take it forward.
But I'm also curious in terms of what the future would look like from a festive season perspective. We are of course entering what is most likely to be the promising period in terms of sales. But even though there are undercurrents of a slowdown, there is talk of global recession. Would these weigh in on the kind of projections you've set for yourselves in the near to medium term?
So that's right. I think the commercial vehicle industry volumes are always a function of how the headwinds and tailwinds act with each other, right? So we do have headwinds in terms of the interest rate growing up and the fuel prices. But it appears that the fuel prices seems to be stabilizing, so that's one good news. As far as the interest rate is concerned, I think we are watching the impact. But if you look at the tailwinds, I think whether it is increasing consumption, government's focus on infrastructure, I think that is leading to tailwind being more than headwind. And therefore, I think the sentiments are better and we see growth happening even in this year. Of course, FY19 was our peak. From there, we had dropped by almost 50% in FY21. Over that low base, I think we grew by 26% last year. In my view, we should be growing in double digits even this year.
While India Inc. hoping that the festive season delivers on demand. We will head into a break, but up next, employees across the country expect to get a low double-digit salary hike next year. That's according to a survey by global professional services firm Aon. A special discussion when we return.